Tony didn't get in yet? Think he went.
I pledge allegiance to the flag of the United States of America, to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
I'd say that you stand in, obviously we, lost a little presence here today. John Scarano, who was a long-standing member of the board, and contributed greatly, not just in this board, on many, many boards that he's sat on. Always a positive aspect to any proceedings we had. And, he just, John always had a story. He always knew, those of you who knew John, he always tell a story, and a great story. He was very proud of where he lived, what he did, very proud of his family, always spoke of his family. A lot of grandkids that he loved dearly. Yeah, so we're gonna miss him here, and we believe that if you want to speak, you can speak that.
True catalyst to the battle.
Yes. Just a moment, sentence. Okay. And we also lost another stalwart in the community, Ron Williams, who was the second president to Urban Community College, which is normally known, and he ran it. Another huge contributor all the way around, not just for the college, but for the county and the community. Did a lot. I mean, Ron really cared about working the college. And his, so we're gonna miss him. He was ill for the last few years, but certainly his presence will be missed. Anyone else like to speak?
Well, I have a positive thing to say. It's very sad that we lost them. They do truly contributed, but everyone must realize today is Victoria's birthday.
Happy birthday, Victoria.
25.
Yeah, that's right.
Okay, let's.
Well, we're gonna do roll call, then we'll.
Yeah, let's do a roll call. Victoria, please.
Albrecht.
Here.
Badlow. Here. Day.
Here.
Gurecki. Here. Bono.
Here.
Mendel.
Here. Very good, thank you. Item number 3, we do have our financials and we have an audit. So let's start with the presentation. Liz or Jennifer, you want, or John, you want to?
So just a couple quick, we're gonna go through both presentations for the IDA and the LDC. The IDA one we will vote on here. We'll let them go, and then the LDC will vote on in the LDC. Just so everybody knows. But please ask any questions you would like. This is a draft. It's like when you open your refrigerator and you don't see milk because you've looked in there too long. That happens when you stare at this thing for 50 times. So please bring up anything that you would like. With that, Jen, thank you very much.
Sure, perfect. Good morning, everyone. I'm Jen Walk. I presented a few years, so I'm sure a few of you recognize us. Liz Bush, she's the partner on the job, so we're both kind of tag team this. So I'm just going to share my screen. We're going to go through the PowerPoint. As John mentioned, we'll go through the IDA first, and the LDC, obviously it's new. So we're just gonna go through the financials on that one. It's pretty short. Please feel free to interrupt me if you have any questions along the way. I'm just gonna share my screen here.
Just so you know, we turn the heat off in here and open the door. It was very warm. If you get cold or something, let us know.
Perfect. Can you guys see that okay?
Yes.
Okay. All right. So we are going to our outline for today's meeting. So we're going to go through the required communications for the IDA audit, the annual audit overview, select financial statement notes, and then the public authorities report on investment compliance.
Can I just say one other, we did not print these out today. We do have copies if anybody wants to review them again. And we'll email everybody the final copies as well. But I do have a printed copy here. If anybody wants to look at it during the presentation, you're more than welcome to take it. Sorry.
Yep, and our contact information is at the end, so if you do review the financial and you're like, oh, I have a question, just feel free to email either of us and we can help you with that. So required communications, this is the standard stuff that you'll see at the front of the financial, kind of summarized here for you. So significant accounting policies, disclosed in note 1. Then accounting estimates you'll see throughout the financial, depreciation expense, OPEB, other post-employment benefit expense and liability, pension expense and liability, and then leased assets and liability. As you could probably recall a couple years ago, there was a standard that required the leased assets be added to the face of the financial statements. So again, no new estimates. These are the same ones that have been reoccurring. Continuing on with our required communications. So these are a summary of the material audit adjustments. Again, very standard adjustments. So recording current depreciation expense on your fixed assets. We adjusted the grants to have match revenues and expenses. Recording GASB 87, that's the lease adjustment. GASB 75, other post-employment benefits adjustment. GASB 68 pension adjustment. So again, very standard. And then Victoria went through the fixed asset listing with the help, I'm sure, of everyone there to dispose of assets that are no longer in service. So there was an adjustment, and I will point that out as we go through the financial. And then we moved the startup costs for the LDC. So as you know, Herkimer IDA is funding the LDC with their expenses. So any of those startup costs, we just moved right over to the LDC since obviously they're related to the LDC financial statements. So past audit adjustments, again, standard to record vacation sick accrual, that we have that at 1 every year. There were no difficulties encountered in performing the audit, no disagreements with management, and no known communications with other accountants. So then jumping in here, so the independent auditor's report, that's the first report that you'll see when you open the financial statement. So the financial statements are the responsibility of management. And then Bowers, our responsibility is to express an opinion on these financial statements. The audit is conducted in accordance with generally accepted auditing standards and government auditing standards. And the opinion was an unmodified opinion, which is, the highest opinion or a clean opinion. So now we're just going to quickly go through the statement of net position. This year, there was a lot going on, but nothing hugely out of the ordinary. It's pretty standard business for the year. So I'm just going to touch on a few things here. When you are looking at this, so that, again, this is the IDA's financial. So the LDC is a blended component unit of the IDA. So that means that their financial statements, their activity is combined, into this statement that you'll see here. So when we get to the end, I'll pull up the financials quickly and I'll show you at the back of the financial, there's a combining schedule that shows the IDA standalone, the LDC standalone, any eliminations for intercompany transactions, and then your total, which is the total that you'll see right here. So again, just a little bit different than the previous year. The LDC, though, will have their own standalone financial statement. That's just the activity of the LDC. This year, since there wasn't much activity, you're not really going to see a huge difference, but obviously once projects get up and running, you will see that activity increase. So looking here, again, like I said, pretty standard, not huge unusual changes. So grants receivable, I just wanted to point that one out. I hope this is big enough for everyone. I tried to increase the font this year.
A little small, to be honest.
Is it small still?
Yeah.
Oh man. Okay. I'll
Blow it up, Aaron.
Is there a plus minus?
There you go.
Does that
Okay.
matter? Okay, okay. So right here, we're just looking at the statement of net position. Grants receivable, I just wanted to point out there is money in there, about 85,000 for the Eastern Mohawk Valley water transmission main project. That grant that was, I believe, a couple years ago. That is still an outstanding receivable, but obviously talking with management, they do believe that is collectible. And that hopefully it can be redistributed. If it's not receivable on that grant, it can be redistributed to a new grant. So we did leave that amount in there, and there is no reserve against any of the grants receivable or the loans receivable. So then jumping down here, again, your loans receivable, I believe there's 2 loans outstanding, so that balance kind of just dwindling down as we continue to go through here. I want to point out capital assets. So this is obviously a huge part of the balance sheet. You can see here, this is the net capital assets. So that will include, you know, your land, your buildings, all your property, plant and equipment, as well as depreciation expense, or excuse me, the depreciation on those assets. So you have 6.6 million in assets this year. And then you'll notice a new line right here, long-term lease receivable, and we have the short-term portion up here that is a lease with Amazon for a parking lot. So as I mentioned earlier, a couple years ago, they put into effect that all leases need to be on the books. That includes from the lessee and lessor side. So that was an addition this year. And in a few slides, we'll kind of go through the notes that are associated with that as well to give you a little more detail on that. Continuing on with our statement of net position, this is the current, these are the liabilities and the net assets. So again, as I mentioned, the current portion of the lease liability and the long-term portion lease liability, that again is a standard that was implemented a few years ago. And in a few slides, I'll show you the detail on that. You'll notice long-term debt has increased. There was a new loan with the county for some land that was purchased. And again, in the long-term debt footnote, which I have a snippet of, we will look at the detail of that as well. Moving on to the statement of revenues and expenses. So you can see, again, very standard revenue for the current year, nothing new here. Down here, you can see the largest portion of the IDA's revenue is from project fees. So that was 1.4, which is comparable to previous years. Jumping over to expenses, again, you'll see very standard expenses. I just wanted to point out professional fees. There was an increase in professional fees related to attorney's fees, but again, as part of the audit, we do look through the detail of some of these, and it's just standard course of business. Nothing that we felt that needed to be disclosed.
Both of our attorneys are on this call, so you can really highlight that item as employment.
So much higher. Jumping down to the bottom here. So this, as I was mentioning earlier, the fixed asset listing was kind of scrubbed this year, which we love to see. We obviously want that listing to be as accurate as possible for everything that the IDA is aware of that they have. So we do see a loss on disposal this year of about 623,000. Obviously looks like a big number. It's a non-cash adjustment. Just a lot of the assets that were disposed of, or excuse me, some of them, were land that don't have depreciation associated, and some of them weren't fully depreciated. So that's why you're going to see that increase right there. again, nothing to be alarmed about. We're extremely happy to see that listing always cleaned up. So then you jump down here, so your change in net position for the current year, 1,500. So basically, again, seeing that loss on disposal, you can back out some of those items, which we'll see in the cash flow statement, gets us to that change in net position. But your total beginning of the year net position, 4.5 million, again, ending the year basically in the same position. All right, jumping over to the statement of cash flows. So this is the direct statement of cash flows. So it shows all your ins and outs for the year. Again, nothing crazy to highlight here. Most everything you would see on the previous slides. Again, revolving loans, we're dwindling down here, so that will probably cease to exist in a couple of years. And again, your standard salaries, professional fees, and business park expenditures are going to be your main expenses here. So your net cash provided by the operating activities of the business, about $600,000. So then looking at your cash flow from non-capital financing activities, so these are your grants. So they're non-operating grants not related to the business park. You'll see the grants received in. Again, this is the cash side of it. So, if the amounts were received in early, or you'll kind of see a mismatch here. So $100,000, and then the operating grants expended, $494,000. Continuing on with the cash flow statement. So these are capital and related financing activities. So this is where you'll see your site improvements, any sales of land, and the grants that relate to your projects. So you'll kind of see there, that's pretty much a wash. You're right around $7,000. So
Is the sale of the land even just the down payment if we haven't closed, so we don't see what did we, deposit of some kind, is that in that?
and this was there was a sale of one piece of land that you guys sold. So if you were purchasing any land, that would be in the acquisition of site improvements.
Because we just have one that we received a deposit, but we haven't closed that small piece.
No, this one I think was at the beginning of the year, I want to say.
Well, where did that deposit go then?
Are we talking about?
Stark Industries.
Tony has it.
So we don't even count that yet. Okay, good to know. So we received the deposit on a piece of property, but it's in
Okay.
that, so we don't actually put it into our books yet.
Yeah. Yep.
All right.
Okay. Good to know. Yep. Perfect.
Jennifer, I have a question, before you continue on.
Sure.
So related to the debt listing, which I know that you will get to. So within 2024, the IDA closed on the Skylar Four Corners, and we had received loan from the county. So that was in 2024. So shouldn't that action, that instance, also be included in the statement of cash flows?
No, so the statement of cash flows is literally cash transactions. So that is a non-cash transaction because you're taking on debt in exchange for the land. So you'll see in the financials, and I can pull them up after. In note 1, it'll show you any non-cash activity, and you'll see that amount right in there.
But that did flow through the IDA.
Say that again, I'm sorry.
That did flow through
Yes.
our accounts. Though.
Yes, but you haven't paid for it yet.
We haven't paid to the county the money
Yes.
back,
Correct.
but we paid the owner of the land the dollar amount for the property.
But that's just the flow through, correct? So that's coming from the county. The county's funding that.
Yes.
Yeah, so that's just an in and out on your side. That wouldn't hit your cash flow because it's not your cash. And Liz, correct me if I'm.
Nope, that's how it's handled, and it's in the notes too. We can pull that up so you can see it. It's a non-cash transaction.
Yeah, I can pull that up right now if you'd like.
Sure. It's on note
Even
one,
though, excuse me, sorry, so even though
right there.
it was funded from, let's say, our financing party, it was deposited into our accounts and then subsequently flowed out to the seller, that wouldn't be accounted for in the statement? Because it did
It's,
through our accounts.
it's a note disclosure. Jen's pulling it up on the screen right now. The standard practices for non-cash investing and financing activities, and we show it right here. Purchase of capital asset funded by a debt. So
I see
that's
what you're
how,
saying. Yeah, I see what you're
Yeah.
saying, you know, in terms of you guys, the cash physically flowed through you guys, but that would be an expenditure on Herkimer County. And then you guys, when you would pay back the debt, that's when it would hit your cash flow statement.
Mhm.
I don't know if we receive any interest on that when it's set, or what it is in the loan.
It still is funding.
So if there was interest on that money while it sat with us, where does that go?
Was that rate paid back to the county or you guys kept that?
We never, yeah, I don't. It was in the account about 40 days because of we had to push out the closing due to
Yeah.
or the seller. I mean.
That would be included in yours because that cash flow would have occurred for you. It was not given back to the county or passed through to somebody else.
Maybe with this, it's a little different because of what she's saying, that the statement and the best practice for IDAs is to show it this way.
Maybe it's different for entities, but it's not.
Well, so would this be recorded differently for IDAs compared to in general statements when someone borrows money from whatever entity, goes into their account, then pays off, or is it done this way as well?
It would be done
It's-
this way. Yeah.
Yes,
Go ahead,
it would
Liz.
be done this way.
All right, thank you.
All right. Okay, so now we're gonna jump down to another required statement for the cash flow is to reconcile the change in net operating income to the net cash used in operating. This is the indirect method. This is what you would typically see on, you know, non-government businesses. So again, this top portion is gonna show your depreciation and amortization. Those are add backs, obviously non-cash items right there. And then your decrease and increase in all your accounts on your statement of net position. So it's kind of, this is an easy way to see where your cash has gone for related to operating activities. So again, gets us back to the same net cash, just a different presentation. Sometimes this one's a little easier to understand. All right, we're gonna jump down now to select financial statement notes. Again, these will be, I just selected some that were had changed or anything that was new or people would want to see. So the note number one kind of explains all your company's policy, all the policies, and this mentions the blended component units, which I talked about earlier related to the LDC. So the LDC is a component of the agency. So this just lets people know their information is included in these financial statements and that they are able to get a separate copy if they so choose. So the LDC was created to develop and cultivate a strong economic environment which supports business and nurtures growth and new investment in the county. The LDC was formed in 2024. The financial statements of the LDC is with the financial activity of the agency since their respective boards are substantially the same and due to the nature of their relationship. So again, as I mentioned before, the financials are included. The IDA and LDC are included together. Capital assets and intangible assets. This is one people are always interested in. It's kind of nice to see where that 6.6 million is sitting. So you can see your beginning balances that matches your last year's financial statement. You can see the increases, decreases, and then your ending. So non-depreciable capital assets around 2.7. That's your land, any improvements to the land, any work in process that's not yet capitalized. Then your other capital assets would be your buildings, infrastructure, anything that's being depreciated, and then the intangible lease assets that we had mentioned before with the new standard a few years ago. Down here shows your accumulated depreciation. Again, you're going to see that amount that we disposed of there. So you'll see that as a decrease to get you to your accumulated depreciation related to your fixed assets above. Then the accumulated amortization, that's related to the leased assets. So that gets you down to your total of 6.6 million for the year. Here's your long-term debt footnote that we kind of just briefly talked about. Again, mentioning the note payable. So, you know, the 2 note payables above, those are reoccurring items. Then you have your new note payable. It was dated May 24th of 23, excuse me, but took effect in 24. So from Herkimer County at a 0% interest rate, repayment of this note will occur as the agency receives rental income from purchased properties or if properties are sold. So same agreement as the previous note.
Jen, can we take a moment to talk about the notes as well as that date? The new debt, the 1,210,500.
Yep, so that the date, that's the 2023, that's just from the agreement with the county. So that we just took the date straight off there for when that agreement was signed. And then obviously it didn't take there was no debt last year. It was purchased in 2024. So that is the 1.2 million for the new park.
So what you're saying is a note or an agreement of sorts was signed in May of 2023, but yet we didn't close on it until May of 2024. Is that it? Okay. And then, so the 2 notes associated with the repayment, one is noted for the sale of the land, but then also, I'll have to read it on my sheet. I can't see that far away. Says your repayment of this note will occur as the agency receives rental income from purchased properties or if the properties are sold. Is that verbiage outlined in the note or whatever companion documents that were signed?
I believe so, yes. Yep.
So in other words, do I understand it that if we receive pilot payments or rental income, so to speak, that we're required to pay back the county based on that as well, not just the sale of land?
Yes, that is our understanding.
See, I don't look at it that way because our pilot payments, well, the pilot, we wouldn't receive, any pilot payments are gonna go back to the county no matter what. It's distributed. It's not like a PIP where we're taking half of that. I think what the rental means in this, if we rent it like we did the Amazon parking lot, those rents would go back to pay down the debt. Not the fact that through the leaseback proceeding, would we give anything different to the county or the town or the school district than what they receive now. I can't see, that's never been an agreement that we've had in place before. I think I'd like to I think we're gonna get with you guys and also Mr. Halleck, Tony Halleck, and have us review that part of it and make sure we're.
Yep, no, absolutely. Look at the wording there.
100%.
Because what,
No, I agree.
right,
And then just one last item. It is more, I guess, a style point as well. So is there any reason why the audit doesn't have the year-over-year comparison to 2023 as well?
Yeah, so government financials typically just have a single year statement. They're just a single year statement. Liz can probably touch on that better than.
right.
Sorry, say that again.
So we haven't had the year-over-year in the past. I didn't have a chance to look at last year's.
No.
Okay. No, typically most governmental entities will have just a single year presentation. I have seen some that are 2-year presentations. The reason that they're mostly single year is because if you put in a 2-year, you would have to do 2 sets of the long-term debt notes, basically the fixed asset note that Jen was just referring to. You'd have to have 2 separate items because you're required by governmental accounting standards to show the beginning of the year to the end of the year. Jen, can you flip back to the previous page for a second? Like for this one here, you'd have to have this one plus the one below. So just typically most entities have a single year presentation. I mean, we could do a comparative going forward, but it's mostly it's single year presentation.
And it
Of
just
the-
might be a topic for discussion moving forward. It's just the IDA has, I think, in years, in a window of years, has seen a lot, like, some uptick and some significant changes. So I think that year over year just might be something to discuss moving forward.
And that could be something that, that could be something we could get from them that doesn't have to be submitted with our audit, but something we can have for review at another meeting. One other thing though, Victoria and myself received a note from the county on what we owed them and what they thought we did and all of that. Did you pass that on to them, Victoria? No? Okay.
Yes.
They didn't have everything correct. I mean, we had to point out that they were missing, Russell Farm and another property that we never bought that was on the books too. So, well, we submit this to the county anyway, so they'll review it too. So, okay.
And to your point, if, we could also probably do this presentation comparative, if that's helpful for you too. I have done that on some other jobs. It's kind of nice to see that if obviously the full-blown audits kind of gets really long, but we could do this presentation if you wanted to see it that way too.
Probably just something to discuss in the future.
Sure. So just jumping back into here. So again, at the bottom here, you'll see the future principal and interest payments. Again, most with the county, therefore, you're going to see that in the thereafter because there's no time limit on that. Jumping over here to your lease receivable. Again, this is the new lease that we talked about this year with Amazon. So this just gives a brief description of the lease being recorded in accordance with GASB 87. And then you'll see down here at the bottom your minimum future rentals for principal and interest as well. Then jumping over here to your lease liability, again, these are the standard leases that you guys have had. You can see right there, the lease in the middle section, there's no additions, just the reduction of the lease liability for the current year, and then your future payments, including principal and interest. Jumping to the last item here for our PowerPoint, the Public Authorities Report on Investment Compliance. I believe, Liz, correct me if I'm wrong, this was new last year. Even if you don't have investments, they require to have a policy related to them. And this is included in your audit, just stating that, you guys do have an investment policy.
Correct. And that is something that the Authority Budget Office, we did confirm with them, they want to see this. So, I mean, if you had investments, obviously it would have to be in here, but even if you don't have investments, they still want to see this report included. We usually include it separately, like as a separate letter behind the financial statements for our clients.
All right, and that's our presentation for the IDA. We'll jump over to the LDC, but before, are there any questions?
Ann brought up some excellent points. I think the problem with us is that we have to submit this by a certain time. And I think what we need to do is take a look next year, because in the past we've had 5-minute presentations and we really haven't had a lot going on. We have a lot more going on now too. And then with the LDC. So I think next year, Victoria, what we need to look at is maybe having a separate meeting that's just dedicated to this. We still have it as a board meeting, maybe, a couple weeks. We just got these in too the other day. We give it 2 weeks out to everybody. Then we have a meeting where we're just talking on the financial side of things. It gives everybody a lot more time. I mean, these are more in depth than they've been just because of everything that's going on. But I also think now before they go to the LDC, we should vote on this one, Jim. And so that way we can move this through and get this out to the ABO, and then we can do the LDC, listen to that, and then vote on that in the LDC, if that's okay.
Yeah. Okay, so let's, we need a motion to vote on this. IDA side. Okay. Laurie, thank you. Any discussion with those recommendations? All in favor, aye? Any opposed, nay? Carried. Okay, now we can move on to the LDC portion of it. Ladies?
All right. So, for the LDC portion, so the LDC, obviously completely separate entity, a not-for-profit entity. So the financials are gonna look a little different. The current year, there is not a ton of activity in here. You will see all the standard notes and everything, and the activity that they had. Also, the LDC is required to file a 990, so that's an informational tax return that will accompany the financial will be a part of. So again, your standard financial, you're going to see the independent auditor's report and then your audited financial statements, as well as the notes to the financials. So again, your standard auditor's report with your opinion paragraph right at the front. So the LDC has a clean opinion, just as the IDA does as well. So we're going to jump here to the statement of financial position. Again, I'm sorry, this is kind of small. Not a lot of activity just being started, throughout the year in 24. This can be a comparative financial, obviously, if started in 24. So next year you will see the 2 years as you were mentioning for the IDA. So for assets, just a little property and equipment for the one project that's going on of 129. Again, the LDC fully funded by the IDA, so you won't see any cash. It's just a flow through when they have expenses. So that being said, you do see under the liabilities section, due to related party, that's due back to the IDA, anything that passed through, including the startup fees. So jumping over here to your, excuse me, statement of activities, the support and revenue, again, support from the IDA, I'm sorry, and then a little bit of miscellaneous income. But again, all of this going directly out to your expenses for the projects that were going on. So your change in net assets is a decrease of 57,000. Again, being your first year, that's very standard for not-for-profit entities. This is your statement of functional expenses. So this does look a little different than the government financials. The expenses will be segregated into the projects that are going on and then management in general. And if there was any fundraising, that would be separate as well. So you can see professional fees, property taxes for your program, the one program that the IDA has currently, and that totals your total expenses of $60,000 for the year. Again, you're going to see more expenses going over to the LDC. However, they're capitalized in that one project that we saw in the first statement. So your statement of cash flow is very, very simple. This is the indirect method. So you'll see your change in net assets, then any non-cash add backs, which you don't have any depreciation this year because the project has not yet been placed in service. So you'll see your due to related party, getting you down to your net cash provided by operating activities of 129. That going immediately out to purchase your property, as I just mentioned. So your change in cash is 0 for the current year.
And also keep in mind with this is a not-for-profit organization, the Local Development Corporation, which is different from, the IDA, which follows the GASB standards. That's why the financial statements look a little different.
So there's no value on the building itself
What,
of the property? There's no depreciation, there's no value to that property that we have.
I'm not sure that that was placed in service yet. So there's, and if there's a building, I believe it's on the IDA.
What does it mean placed in service? I'm sorry.
If there's a project that's completed, once it's completed, you place it in service and that begins depreciation. And so until it's complete, ready to be used, no depreciation starts.
Okay.
So like I said, the financial statements, not a ton of activity for the current year as it was just formed. So then you'll see here your nature of activities that explains, the LDC, and then jumping into note 2, those are your significant accounting policies. So again, mirroring the policies that the IDA has as well. So your basis of accounting, basis of presentation, so net assets without donor restrictions are all you currently have. Obviously, going forward, there could be donor restrictions, then that would be added to that note. Estimates, again, these are just standard policies that are in both the IDA as well as the LDC. Your property and equipment. So property and equipment are recorded at cost. All expenditures are capitalized in excess of $1,000. Expenditures for repairs and maintenance that do not improve or extend the life are expensed as incurred. So that kind of explains your capitalization policy. And then your tax status down here, this is a new note. You will not see this on the government entity, obviously. Again, just talking about the 990, again, informational return that is completed for the LDC.
and that return is not due until May 15th. So we have some time to prepare that and finalize that.
I have a question.
Sure.
So just taking a step back to the Masonic property that is not yet placed in service. So the nature of what the LDC does might not always render a property to be placed in service, but meanwhile, the LDC might be spending funds to help develop the property. So I feel like then our balance sheet might always be upside down. Right? So if we have, say for example, the LDC property, not yet placed in service, but yet we're spending, to the tune of 100, and let's just round up and say 200,000 because we're not done yet. So for a period of time, I feel like we will always show as being leveraged. And that's just, I don't know if that is indicative of our practice. I'm just wondering, so if it's not yet placed in service, is that a requirement due to audit standards, or can we value that property, that asset, place it on our balance sheet while it's being developed?
Okay. I think I can answer.
Might be something that we can come back to. I'm not sure if that is, I guess, our practice, the spirit of what.
I think that's what an LDC will do compared to an IDA. So the LDC will do mostly it'll be brownfield type projects, Bill's School, Charlestown Mall, Remington, Ames True Temper, those type of sites that the whole program, except for really the Masonic, or what it could be, is to get it ready for developers to come in and take them over and then develop the project. But in a case, let's give Bill's School an example. We'll take that project in, do a few things and sell it to the developer that'll help pay down some of the costs that we've incurred already, or keep it in that account to spend more. It's going to deter by the project. Same way with Charlestown. You know, the opportunity for Charlestown is quite huge right now.
Right, I'm just wondering, is that the requirement to report that on the audit? Whereas the value of that asset, the Masonic, can really it will take several years for that to be an asset. Based on it being, you know, put in service. I'm just curious, is that an auditing standard for not-for-profit?
So what we have on the LDC books are, like Jen said, 129,000 of current expense. Well, what we've done is capitalize them as like work in process on the sheet to move forward for that temple. But placed in service just means, you know, basically when we're going to start taking depreciation, it's not to that point yet. So yes, maybe in these next few years, you might have, you know, more liabilities than assets, and you might be in a negative position. So we had captured everything that had come over. Are there more items over on the IDA that need to be shifted over to the LDC?
No, not as of this time, no.
Because I'm looking right now. But yes, you're right. These next few years, you might be in a situation where you have losses or more liabilities than assets just while you're getting started. But we have captured everything that we're aware of, you know, basically that came over, you know, and it's, like I said, about 129,000.
Yeah.
So anything that's related to the LDC, and that's why we moved over some of these other items related to it.
I think each thing's gonna have to be a project by project and how we break it down over that time. And something like a village school could only be in the LDC for maybe 6 months, or it might be.
Okay.
Or it might be a year, you know, depending upon how we work with the developers and what happens there. But even though we might not depreciate that property because there has to be work done to make it viable again, but as we move it through the LDC, it becomes that way. Where Charlestown, if we take that over, that's valuable right away. That can start, there'll be no structure per se, and we can start looking at that differently because there'll be things added to that site to make it more valuable because of location. So that'll change things up.
Right, and as John mentioned, so when you're selling any of these off, obviously then you're gonna recognize that expense because you haven't recorded the depreciation, so your net book value is whole on those assets.
Right.
Yeah, I have a question. So when does, when and who determines when that becomes an asset?
No.
Or a threshold?
Well, it's an asset now. We're just not depreciating it
Just not,
because
well,
we
why
don't
does
have
the
it. It's
depreciation?
not a value to put anybody in there tomorrow. You know, if it was all redone and we could do it, then we would start leasing it out or us going, and then we would start.
So who determines that?
Well, it'll be with a group because we'll have to make sure that it's ready to go, and then we'll share that with the audit.
Move in or we get a tenant there, then I would imagine.
That's-
Be able to.
yeah. For this.
Thank you.
So all of the items that are included in that 129,000 are right in the QuickBooks that is maintained at the LDC IDA. A lot of it is asbestos abatement and cleanup type items that are included in that 129,000.
Thank you.
But I guess my question is, are there more items over on the IDA that should have been moved over that, you know,
No,
that,
not at all, no.
okay,
Thank
Yeah,
you.
I think she was just mentioning that they will be doing more, and so
Okay.
it will get up to that amount. And again, GAAP just requires that you accumulate those items, add them to, you know, whatever it takes to get that property ready, and then, you know, place that in service. That's a capitalized item. So if it was, you know, the item was already placed in service and you were doing some kind of maintenance, that is expense as incurred. But until it's ready, you know, usable, again, determined by, you know, you guys as a team, then it's capitalized.
Yep.
I hope that helps.
Yeah.
Okay, so just a couple quick things here. We, again, jumping over, so site development, you can see that's what we've been talking about, the 129, again, no depreciation expense recorded yet for this year. And then a required note for nonprofits, liquidity and availability of financial assets. Again, all the expenses are funded currently by the IDA. So as if, in the future, there's cash or investments or, accounts receivable, however it may shake out, that would be disclosed here. As a requirement saying, what are the assets that the company has to continue on for the next year. And then cash flow information, again, no non-cash financing or investing activities for 2024, like we had looked at with the IDA. Again, so a standard report here at the end, independent auditors report on internal control over financial reporting in accordance with government auditing standards. Just your report saying that the purpose of the report is to describe the scope of the testing of internal controls and compliance and the results of that testing. So any findings of the audit, which there were none. I just want to quickly jump back to the IDA's financials. I just want to show you, I mentioned this, but I didn't show you at the back here. You will see the combining schedules that I mentioned again. So you can see the IDA in one column, the LDC in the other. The LDC column should match their financials that we just went through. Any eliminations for any intercompany transactions between the LDC and IDA, and then your total column that matches back to the financial statements that we looked at. So there's the combining schedule for the schedule of net position, as well as revenue, expenses, and changes in net position. So that's just a little more information for you guys as well.
All right, well, thank you. Does anybody have any questions at all? No. Always informative. I appreciate you both working with the staff, myself, everyone during the year. It makes it a lot easier at the end. Always available to answer our questions, which we think is great as well. We'll vote on the LDC in the next meeting after this one. But I think if there's nothing, I think we're good then to move on. Jim? All good? What? Oh, yeah. Before you go, you have to give back us the host.
I think I just made you the host. And again, if you have any questions, Victoria has her contact information, or John. If anything comes up after when you're looking at the financial, please don't hesitate to reach out.
No, we will.
Yes.
Thank you so much.
All right. Have a good day,
Thank
guys.
you.
Yeah, for Liz, thank you very much.
Thank you.
Very informative. Good.
Let's move on mission statement. Aaron, you want to please read our mission statement?
Mission of the Herkimer County Industrial Development Agency is to deliver economic incentives to businesses and industries that to diversify and strengthen Herkimer County's tax base and enhance community vitality by supporting job creation, housing, business and industrial development, and community revitalization. We strive to develop the local economy in an organized, sustainable, and environmentally beneficial manner.
Okay, thank you. Item number 4, the minutes, pages 66 through 70 of the last meeting on January 28th. Are there any objections, corrections, deletions that need to be made? Hearing none, I'll need a motion to accept those minutes. Alana, second by Lori. Thank you. Any discussion? All in favor, aye. Any opposed, nay. The January financial reports are on 71 through 78. Any discussion there?
Everything looks in order. You're going to see some of the last on the loans and leases, the last 2 Bartlett and Beer Belly Bob. So that'll close those out. I don't anticipate us doing an IRP loan again or the one, now just well, in my head what Bartlett was under, but we probably won't be involved in either one of those again. We're, truly helped those two companies, though, and we're glad we could do that.
Any questions or comments? On the financial. Need a motion to accept? Alana, Tim, second. Discussion. All in favor, aye. Any opposed, nay? Carried. Revolving loan. Yes.
No, we're all, that was all in here. We're gonna not do the, other one. We tried to, bring down the agenda a little bit just out of respect, and the next meeting. We can cover it.
Item 16, Harris report.
So as you know, every year they demand a ton of, reporting and, review of the different policies and procedures. Victoria, you thought that we could, vote on them all at once?
Yes.
So if you could just list, Jimmy, what each one was, and then we'll put support, but these, nothing has changed from last year except for the, no, there's been no changes to anything, right, Victoria?
The first three are policies that have not changed. The last three bullets are narrative documents that are required to be attached. So those are new, not new documents, but have been updated.
The
for-
report, but the mission statement's still the same in the last
Yeah.
one, it's just the measurement report, which outlines all of our projects.
So let's, we're gonna be voting on the annual investment report, the Department of Investment, Defense policy, and the procurement policy. And then the operations and accomplishments, assessment of internal controls, and the performance measurement report and mission statement. So I need a motion to accept all 6 of those aspects of the, very, Tim, discussion? All in favor, aye? Any opposed, nay? Carried. All right, let's go to item 7, the Rickmer Solar and HCCC solar extension request.
So the original company that had both of these, sold out to a new company. And so they've asked for an extension, working with Dan Spitzer at Houston Russ, wrote up what we could do for the extension here. We are charging them $2,000 to do this, as well as they are paying all legal fees. The new company was it Greenbolt? I think I don't want to say it. Yeah, Greenbolt Power.
Any questions?
So we'll do, each one has to have its own list.
All right, let's do Rickmer Solar first. Need a motion to accept. Lana, second, Tim, discussion. All in favor, aye. Any opposed, nay? Carried. Let's move on to number 2 on that HCCC solar project. Motion, please. Lori, thank you. Tim, second, discussion. All in favor, aye. Any opposed, nay? Carried. All right, item number. Okay, let's go to 9. Temporary incident ownership, there's 2 properties there, 133 North Main Street and 137 North Main Street. John, you want to get the
So, during the MOA process, we found that several properties at North Main Street have been put in disrepair. The structural engineer has been through, 4 or 5. We've already done assessments, environmental assessments on the other ones. These 2 we have not. There's many, I talked with the county attorney, I talked with our attorneys, there's a couple different ways, but the easiest way to get into these 2 properties is to ask the judge for temporary incidents of ownership to go in and do the environmental assessments. We don't really have any other grant or any other way to do anything with these properties just yet. But after we get the environmental assessments, that might open up some EPA funding. We know the EPA is under a little bit of a change now, but my conversations with them have been, the current administration is very in favor of keeping all the brownfield programs moving ahead. In fact, adding some additional programs. So what we'd like to do is, at the request of the chairman of properties, he requested that we send in 2 board resolutions that outline what I just said. And that's in here, so we'd like to move those, forward over to the county. I think one of them, I don't know, we gotta do them for both of them, but one of them has something a little different to it than the others.
If I understood Lorraine's email correctly, and I tried calling her yesterday. One of them is not yet in foreclosure, and according to the statute, it has to be in foreclosure.
So I talked to her yesterday myself,
Okay,
and she felt as though when we sent this paperwork to him, he would be more than willing to work with us.
yes, that's different.
So, but she could do still, you can do temporary ownership of it, incidents of ownership on any property. Especially something that's abandoned and that has structural problems.
I'm just going by what she said.
Okay, so we're gonna
I
push
know
these
it's a lot.
through to you
And
guys, and
that's
then,
fine, then we can look at them.
Yeah.
I just wanted to bring that up.
Yeah.
because-
because when I talked to her yesterday, that's what she said.
And again, maybe she found out more. so-
Yeah, but she said the only people that, because I said, well, can the village do this, can we do this? She goes, you can do eminent domain. I go, no, we don't want it.
Right.
We can't take these yet. We don't know enough about it to take these over. So we
I
want-
talked to her late last night. 133 is in foreclosure.
Yeah.
So that would fit the criteria. 137 is not in foreclosure. The criteria is different. She recommended that the village codes and their attorney push their way to get into that building. She doesn't think it'd be a big problem because they only earned arrears of like about $1,500 in that one building.
So what she told me yesterday, so she told you they could.
That was at like 4:30.
So the county can't do, they cannot do, temporary incidents of
She didn't say
ownership.
we couldn't. I
Yeah,
mean,
that's-
it's the
It can be. done.
consensus, majority of the legislature talked about it previously, and we're kind of erring on the side of caution. Cause that one's just not in foreclosure.
But it's structurally unsound according to the structural engineers, and it's a blight and it's an abandoned building.
But she's telling me that we're probably safer at the county to have the village codes
Right, I think.
push forward to get in there to get your
We
evaluation.
didn't have to do that. You can see from the outside and the back.
So all in all, we're all, want to be on the same page.
Right.
Just a little bit of red tape there.
So, well, I think that you all should have the conversation with the village then. The IDA is only doing this as a conduit.
Well, they have to approach it.
Well, I'm sure they have.
Something. to
And-
me,
and-
No, because it's IDA.
My district, I haven't heard it.
Oh, that's yours now, that part of Main Street?
I got that, I got the,
This is too confusing.
I got the west side, he's got the east side.
When's the last time it was occupied?
And, the mayor of Kirkland contacted me about.
12 years.
That it was torn off.
Yeah.
And, you know, I told him we need a letter.
What do you need a letter for that?
Just for asking for help and what she wants. She didn't really say what she.
So that one, we're going after a CDBG grant to help remove that. So we've been able to, the judge actually ordered that building to come down.
Right.
So, I mean, and that's why I feel as though the judge would definitely give these because they want to see Main Street cleaned up, even though it's two different judges.
Well-
It's Mr. Rose, Judge Rose and the other, Judge Lou.
And I'm sure they will if they can, but yeah, my understanding is right in the statute it says they need to be for temporary and center loan.
Okay. But we're
And
gonna-
again, maybe there's more information, but from what Lorraine told me, that's what it says.
But then even too, she said to you something that they probably could happen, but you guys don't feel. Well, I still think we submit these two on behalf of the village.
Yeah.
And then see what. can
And then
happen.
we can discuss it.
Yeah.
in the-
It'd be nice to get to all the stakeholders.
Like,
Takes a phone call.
Yeah, did Lorraine talk to you about the one property that she thought the gentleman would be willing to hand it over to?
but when we want a structurally bad,
I don't know, I'm just.
yeah, and once again, he backed away before anything else. We haven't heard from him in months. She'll tell you the same thing.
Right.
I think it's been 2 years.
Okay. I just
So,
wasn't sure if you were.
yeah, no, it's, well, but the problem, see, the thing is though, the grant that we want to go after for the EPA, you bundle these four together. and it'd be easy to take them down and then clean up that part of Main Street. Still leaving Brock's place fine, and still leaving, can't think of his name, Jason on the corner. Yes, leaving his property.
Four of them?
No, the other ones we already got, they were abandoned too, but they weren't paying taxes, so we got a temporary incident of ownership in those a long time ago.
So I think I can speak for most of the legislature that we are on board with helping. We just want to make sure that we're not doing anything we should.
It's just a,
Yeah, I think just a little lack of communications with the village,
Which now,
conversation, the
let's
mayor.
move
I don't know
move
how,
ahead with these and she-
and she called you, Mark, tell you what she wants,
not always.
she hasn't called me,
Well,
then we get,
so I'm.
See where we are.
Conduit right here. So you've known about this, you know about the BOA grant, we've discussed it. You've been to a BOA meeting when it started. We talked about the area. The area hasn't changed.
oh, by all means,
This
it's
is
not
just
the
the
happen, but
process.
the rest of the colleagues in the room want to make sure.
There are businesses too, so we're just trying to work with them.
But-
If they have, if they're bound by a statute, then they're bound by a statute.
Yeah.
We're just doing our part and trying to work. with them.
We'll move ahead our part and then you guys. What you want.
That'll work out.
Okay, all right, I need a motion on both 133, 137 North Main Street, 10.
We're just asking for, we're.
Temporary incidents of ownership.
So we're asking for a judge, I understand it correctly, to issue PIO.
Yeah.
Temporary incident of ownership for due diligence vendors to go into the property to assess it for the potential of grant to improve the property
Or removal, yeah.
removal.
And, everybody that goes in there is insured. We check all the boxes like we've done every time.
And then once grants are applied, then the current owners can still own it.
No, that by that time there'll be, so there's many options that can happen after
Just
that.
curious.
So before you want to take any property, you want to make sure it's environmental. That environmentally you're covered. So you do a phase one environmental. If the village, so at that time, because it is abandoned, no matter if they're paying taxes or not, abandoned properties can still be taken through 19B.
That is correct.
So it's abandoned. So the village could start the proceeding to take it 19B, and then they would take it from that person and then do it that way. But nobody really wants to do eminent domain. It doesn't look good for anybody. I mean, if we had to, we could, the village could, we could for economic development reasons, the county could, we all have many avenues to do that. It's better not to right now.
Okay.
We all saw what happened in Oak Creek County. What do you mean?
State.
No,
grants,
for what?
Right?
For like the environmental?
Yeah.
So that's part of a grant, yeah, that's the BOA grant that we have.
Everyone in this group.
No, there's several grants, Frank, it starts out, so right now, the first grant we received was 200,000 from the state to do a brownfield opportunity areas for. So what we've done is a lot of the assessments already, but these are two that we have to still do. So that would be part of the grant. So part of the grant too is that we have to invest 20,000 that we voted on to help the village do this grant. So the 20,000 that we'll do will most likely go towards some of these things, but it's all covered.
Motion was made in second. All in favor? Aye.
I didn't get a second, no. I only got 10.
Corey. Yeah, Corey and Tim.
Thank you.
All in favor? Aye.
Did Tony read?
Any opposed? Nay.
No, he won't.
Oh, there he is. No.
Carried.
It's the beer.
Let's go to ICC, JDF. Is there a representative from ICCI? Sahara? Sahara, I'm sorry. Saria?
Hi, no, I work with Greenville Power.
Oh, okay.
Very good.
There you go. Can I ask you a question then, sir, with Greenbowl? When do you notify the towns of the change in ownership so they can work on the cleanup of the site after it's done? I can't think of the name of that. The decommissioning clause in each contract with the town. So now it's still under HCC or Herkimer. When do you reach out to the town to let them know that that's changing too?
I will find out for you. I've just joined Greenvolt Power, just a few weeks ago, so I will find out and circle back with you.
Okay, and I would really want you to circle back with the towns to make sure that they have that information as well. It's critical on these projects, especially, I'm sure Greenvolt's a great company and you'll be looking to do more projects and this will only help that for you.
Thank you.
It is.
There is.
Oh, yeah. Oh, yeah, you have to because it's it's bonding through a certain company and it's through HCC. So, or HCCC Solar. And if you go back to, they don't own the project anymore. So how do you go back and fight that? So what happens is they're supposed to let the taxing or whatever jurisdictions know that a new owner has it and they're part of the decommission. Well, what she's doing, when they've had change, so many of these solar companies have big changes or they get bought out, which is fine, but just as long as we know that. Okay. That's right.
Okay, all right, thank you. Let's go on to item number 8, our last item, from ICC JBF. Tony, you want to give us an update on progress we're making? I know there's a lot of emails going back and forth last week. Mr. Howard,
Mr. Bono?
There you go.
you want to give us an update, please, on
Morning.
JBF status?
Just bring everybody up to speed. The last directive I had from the board was to send a drop dead letter back at the beginning of February that followed our January meeting. To recap, in December, we received an application on behalf of Mr. Feldmeyer and his holding company to consider the assignment of this project to an entity that acquired the assets and the name of JBF Steel. There's some bumps in the road in getting information together with our compliance process in terms of reporting. And we've been bouncing around until yesterday when we finally received an application on this. In regard to the application, it is generally adequate for purposes of an assignment. However, it is unclear to me that the Feldmeyer Group is current on their pilot payments, and there's an open question, which I don't know if Feldmeyer or the current operator can answer, as to what the job reporting was at the end of 2024. And this is not so much an error in the application. It's more of setting a baseline going forward if we were to approve the assignment, in terms of just clarifying how many jobs are currently there and how many will be maintained over the balance of the pilot. There is, from my computation, 4 years left of tax benefits should this project be assigned. We've received the project fees, and as I said, the application is generally satisfactory to me, subject to clarification on the jobs reporting. And I know Victoria was following up on that, and I can't say whether or not she's gotten the information required. We've done it in the past. It's at the discretion of the board. And I know John and I have had probably more conversation on this one assignment than we've had cumulatively on a lot of projects. And that might be an understatement. There have been some hiccups, but from an administrative legal perspective, there's an application that was filed, and it's in the hands of the board to decide whether or not they should choose to approve that. And John, if I missed something, putting aside some of the more personal bumps I had in this, I apologize, but I'm going to dump it back to you at that point.
It's not complete with job totals. We know that. Yes, it's an application. Was it signed and notarized? I don't think it was. No. What our big concern is, yeah, we'll pass this along, but what are we going to get for the information we need for the next 4 years? It's going to be like pulling teeth. Oh, we believe they'll be in default. There's no, I can't see them not be. The information they sent over to us has not been accurate, has not been true. They reference their plant manager still is Ron Zatad. No, he's left 6 months, 5 months ago. It's very troublesome. There was some other emails of a personal attacks that were in there too. Not on myself, but on our attorney that I took a huge offense to. And I responded back to her.
I can't hear you.
Can you hear me now?
Yes.
Okay, yeah, thank you. So, as a board, I would, you want to continue on and develop things. As the office, we are very concerned we will not get anything we need just from the reluctance that we've seen so far. We do not want to turn away projects. I understand that, but to me, this is just an assignment. But even the last part of JBF, we're still waiting on documents that we need. When they're not submitted, that affects us. And that's a big problem.
I don't want to put this board in jeopardy with good standing with the ADO or the comptroller or whoever we looking at us. So, and I agree. What does it take to get these figures? And we've been going around and around, so.
They're already being reported to the government.
We don't know if they are. We don't know if they turned in their 40 times. I'm betting they haven't. Do you think they have?
to with their quarterly.
I don't have the 2024 document yet, which will be required to be submitted.
Which to my point is an event default with our agreement as
No.
well. So we don't
But-
have
but-
to issue them benefits.
Nor do we
What
think that
obligations do we have?
they turned in any of their stuff, man. You might say, yeah, they owe the government, but I'm not believing they did it. I think Jake Feldmeyer, who's supposedly still a consultant now with them, and JB Doherty have their money and they're good to go. They're both late 80s, early 90s, and they're happy and they're done. This other gentleman, I mean, they just formed another company that they want to put this under 5 point something out of the Carolinas. They haven't done that till like last week, right, Tony? Last week or the week before. Everything's just very kludgy. And it's not like now whether they've done different things in California, we don't know. We're just not getting a good vibe. Tony offered to have them come today and at least talk about their project. They didn't want to. He's been around all over the place here, giving these little things. And, he went to the county, which I didn't think was a good idea. He went to the state. He talked to Allison. Allison said, "What's up with this guy?" He said, "Yeah, no idea. He's not meeting his requirements."
Just a general, introduction of what you wanted to do, nothing specific, but just, you gotta, but these are simple conversations that should be had between the attorneys, and we're not getting the answers, so, I move on, and is that the flavor of the board?
Do we need to vote on not accepting it, or what do we need to do, Tony?
Well, I guess the answer is you have an application in front of you. Are you gonna deny the application or accept it as approved, or just not act on it?
We'll leave it on.
We have a request from Feldmeyer to assign. We tabled deciding that. I think we need to vote to decline the assignment.
We need to qualify it. Tony, what do you think we would need to qualify that?
And I'm sorry, I'm getting a warning bandwidth problem, and you're going in and out right now. I apologize. You're back. Okay, go ahead.
Tony, she asked, do we need to qualify why we're voting, or why the board is voting to not move ahead with the application and the assignment?
I don't think that that's necessary, however, and I would say due to the default in the pilot payments and the failure of the job recording, it wouldn't hurt to notify that as part of the decision making. You're going intermittent again.
Hey, Jim, that needs to speak up.
So you want to deny the application and wait for a response?
No.
I'm not making a recommendation one way or the other. If you were to deny, the basis I would deny would be that there was a failure to comply with the job reporting requirements, which are fundamental to the financial assistance, and that the pilot payment from the last installment was not made. So they're in default.
The thing that we specified to them from the beginning is March first, we needed to put the property either back on the tax rolls or keep it off. It's going back now. So,
no action.
no, you're voting no for the reasons Tony just specified. If you want
I'm
to.
not even sure if we need to vote on that, but I don't think we've ever declined one in the past. I don't think, remember, have we ever declined one in the past due to incomplete information?
I don't ever remember us denying them.
Better off.
No, it's-
Respond and reapply, we'll make the adjustments.
Well, but they won't be for March first, so they're gonna go back on the tax rolls for this year.
So they enter the process again with whatever time.
But we've told them that for 2.5 months now.
Oh, I know.
Yeah. I really think,
We need to
Precedent.
set the,
Approve
right,
that.
right, so I
Approve that
think that's
application.
more the thing as well, is we have a process, and if we continue to have, you know, Tony, Victoria, and John spin their wheels on it, it's just not,
Right.
here's the process, follow it, and we will work with it. I don't know, I think it's pretty simple.
It's great.
Let's, I would go with the advice of council on what we said, those two items, and deny it, or not deny it, but
No,
Put it on hold.
it is.
no, hold, it's no hold.
No, it's denied.
Denied.
All right, denied.
When they're-
Denied.
deny it. I need a motion
But he needs to qualify that and letter back to them.
Oh, he will.
Recorded
Yeah.
for
on those two items. Pilot.
legal purposes.
Yep.
Need a motion?
I motion.
Corey, second. Tim, discussion further? All in favor, aye. Any opposed, nay. All right, that's, completes our agenda items, comments by elected officials. Mark?
No.
Thanks for the-
Any other comment? You guys want to hear?
Greg?
No, I'm good.
As you know, Greg, we're gonna fill, you guys are gonna have to fill at your committee, John's vacancy.
You'll never fill it,
So
never. Sorry, but he was
let us
very
know
good.
down the road what, who the new lucky person. is.
Yeah.
Okay, sir, thank you.
We need to go in executive session, and we need to let Tony and Shannon stay on.
Okay, you want to do project updates first? or-
The only thing I have to say is, we anticipate having Antonio Delgado here right after our meeting in March. Yesterday, he made an announcement, he wasn't running again for lieutenant governor. I believe we all know what he's gonna run for. So we have a great opportunity to have him here, and one of the main projects we're gonna talk about is Remington Arms with him. But we are gonna do a roundtable again. Did you come, who came to the last
I was
round?
there.
Okay, yeah, so we're gonna set up a smaller one of those where, yeah, it was very neat.
Yeah.
So,
Yeah.
yeah, I mean, I think so too, and he realizes what he's, he is, and he's a rap star, by the way, in case y'all didn't know that. But if we could go into executive session.
Yeah. I have a motion to go into executive session for advice of counsel on, projects. Second, Frank, thank you, Ride. So today, I need a motion to adjourn, Alana, thank you. We are, motion, all in favor, aye. Any opposed? Good, we are adjourned. Now I will call the, LDC meeting to order.
We need to.